All right, hey everybody, good morning. My name is Ron Haydt. I'm the president of Financhill. It is very nice to be here with you today. It's my first event with Tanya and her team, so thank you to them for having me. You guys should be able to see my screen. You should see that big fancy disclaimer. So just to make sure that we are good, can you just give me a couple yeses, just so I see a couple come in? That way you can see my disclaimer. And then we are going to rock and roll. Wonderful. Thanks, GM. Thanks, Sam. Thanks, Al, William, Dennis. Hey, Dennis, long time no see. Hey, Gerald, you too. Okay, guys, again, very good morning. It is great to be here. My name is Ron Haydt. I'm with Financhill. What I want to show you today is some pretty exciting stuff. You're going to be here for a couple hours with some awesome presenters. I'm going to kick it off with the hottest stocks for 2018. Before I go any further, if you ever see me in a live setting, you'll always see a disclaimer. Nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. Past performance is no guarantee of future performance. While we're in this session together, I may say things like, hey, you can do this, you can do that, you can buy here, you can sell here, etc. It's all from a paper trading perspective. I am not a licensed financial advisor. I cannot tell you what to do. All right, so we're going to have some fun. If you do have questions as we go through the presentation, please feel free to type them in. I have a hard stop in 45 minutes, so we have a lot to cover, and it's also going to be interactive as well. So here's what we're going to do. We're going to go data mining for trade ideas. I'm going to show you one of my favorite ways to earn income as well. So you'll be able to walk out of this session with some ideas in your pocket. Now, I like to kick off a presentation like this by asking one question. What do you think is probably the #1 question we have as traders when we approach each trading day? You know, I would say it's probably, after we've done all this homework, spent time away from our families, maybe things we'd rather be doing, we might spend hours doing this, and we whittle our stock ideas down to maybe 2 or 3 candidates. You don't know which one to pick, because at best it's probably a 50-50 coin flip. But what if I told you there was a way that we could solve that problem and actually use the stock's own historical track record as our secret weapon? And that's what we're going to do. So literally, and I think the email said when we had sent it out, within 5 minutes, I promised you the hottest stocks for 2018. I still have about 1.5 minutes, and we're going to do this in literally a couple clicks. All we have to do is go to Financhill.com. We can just type in any stock symbol, sort of looks like Google, if you will. We're just going to go inside. Now here's where the fun starts. Okay, watch my mouse. This is all we're going to have to do. We're going to click screen. We're going to click seasonality. And then all I have to do is scroll down. These are the hottest stocks for the first quarter of 2018. So I guess we're done, right? Presentation over. Not so fast. There's some pretty cool stuff I want to show you. But seriously, these are the hottest stocks. And the best part is, it's not that I think they are, or you think they are, or some guru or whatever thinks they are. We are using the stock's own publicly traded history as our guide. So we can confidently say that, are you telling me that Netflix goes up 37% over the next 15 weeks? Yes, I am. But again, it's not me, it's the stock's own data. How about Adobe? Does Adobe go up 26.64% to be precise over the next 15 weeks? Historically, it does. How about Skechers, Advanced Micro, Big Lots, Zoomies, First Solar, Nvidia, which had an amazing day yesterday. So did Adobe. Domino's Pizza, American Eagle, Shutterfly, Buffalo Wild Wings, man, even IMAX is in there. All these stocks, this is what they do historically. Now you might say, well, okay, hold on a second. How can these stocks have these type of track records? Big money. It's the institutions. Now, I don't know you guys, but I would probably say a lot of us fall into the retail trader category, which usually means we're not trading $100 million. We're not trading a couple $1 billion or more. So it's really difficult for, in that sense, you and I to move the market. We can't create these types of patterns. The big money is the one that does. So what I want to show you now is a couple stocks. We'll talk about how and why this works. We're going to do some trade ideas too. Now, one question you might have is, how do we get this list? Let me just show you that real quickly. I have this preset, and then I can hit the save button, and every time I come in here, I can access this data. All I've done to get those stocks that you see there is I'm looking for stocks that at least go up 5% over the next 15 weeks, which is basically the first quarter of this year. Now, I could bring that back, and if you said to me, hey, I want to look for stocks that go up in the next 6 weeks or 4 weeks, if I do that, the list changes. Now we got Western Digital, we got E-Trade, we have Marvell, Xilinx, Papa John's is still there, and so forth. Even have Delta, Silver. But I went out 15 weeks. And if you ever change a setting, you just come back in here, go back to your, what you saved, and you're good. But anyway, stocks that go up at least 5% over the next 15 weeks, at least 70% of the time. Now here you might say, well, wait a minute. Can I pick stocks that go up 100% of the time? You can historically, but there's going to be very few that meet that criteria. I want to cast a big net. And my goal here is, after I cast this big net, is I just want to write down companies that I've traded in the past that I feel somewhat comfortable with. Because while there might be a stock on that list, like AOBC, I have no idea what they do. They could make widgets, they could make, drugs, I have no idea. So just because it's the best performer, I probably wouldn't go there. What I would do is go to Netflix or Adobe or Skechers or AMD or Big Lots, companies that I do know. Maybe I've been to their stores, or I shop there online, or I've traded them. When it comes to stock rating, we'll get into this later. That's just our proprietary stock score. But then I look for optionable stocks. Yes, minimum share price $10, just because I want to cut out the little guys. What I'm really trying to do here is I want to trade options. I don't have to. I could trade stocks. I could trade credit spreads or directional options. And then I think this is really important when we talk about seasonality, which is what we're looking at. Minimum number years trading history. Facebook, Alibaba, Snapchat, Twitter, they may have gone up every year for a couple years, but my analogy is even a blind squirrel finds a nut once in a while, meaning you can get lucky just by accident, But if I at least go 10 years, what that does is it catches the last major market correction, which would have been 08, 09. So I just want to go back that far at least and say, okay, if the stock market had a pretty crappy year, did this go down too? And if it didn't, and it actually went up, well, holy macaroni. I mean, that's huge to me as information. And then we added this because a lot of our members wanted it. They wanted to use some sort of volume filter. I put mine at 500,000 shares a day. There's no right or wrong number to any of this. This is just my settings, but you could move it to 250,000 a day. I just leave 500,000 just to cut out some of the thinly traded ones, especially if I want to trade options. All right, once all that's done, like I said, I just go up here, hit save. I just give it a name. And then once I save it, I go here, and then I can have my settings and I can access it. And then every time I log in, I don't have to go through all this again. All right, once all this is done, just like I showed you before, now we have stocks that seasonally move higher. So what I'm going to do is I'm going to write down some stocks. Netflix is a company I like to trade. Adobe, that was a rock star last year. Now I mentioned some of these others, but I also like Applied Materials. I like NVIDIA. And if I want to see more stocks, I can just make this to go to 50. And then, there's United Health. You'll see Penn, Wynn Resorts, Xilinx, Ross Stores, Valero, Dick's Sporting Goods, Boyd Gaming. You get the idea. I just want to write down some of the stocks that I like to trade. Once I've done that, all I do is hit search, seasonality, and I can put a stock in there. Why don't we take Netflix? Okay. And our search was 15 weeks. Well, if I scroll down here a little bit, actually, let me stop right there. Let me show you what this chart means. The left side is what the stock has done. The right side is what it could do. We are not predicting the stock will go from here all the way up to here. I'm not predicting, well, I'm not the software, it's not predicting the stock's going to close at $281 by April 13th. It is the probabilistic future price based on past history. So if the stock lives up to its historical average, holy mackerel. You know what's really cool here? You can actually see when the stock historically pauses, when it goes bonkers, when it pauses, and then starts running again. You're probably jumping ahead in your mind saying, does that mean we could actually be very surgical in our attack and our approach to this stock? Believe it or not, yeah, it's just mind-boggling. Now, if I scroll down, over the next 15 weeks, Netflix has on average historically risen by 37% based on 15 years of stock performance. Netflix has risen higher in 11 of those 15 years with a historical probability of 73%. That's pretty stunning. I would say to you, when's the last time you had a 73% level of confidence that your stock is going to move 37.1% in 15 weeks? We're probably chuckling and saying, yeah, probably never. Well, watch what happens now if I move this little cursor left or right. 14 weeks, 13 weeks, 12. Ooh, over the next 12 weeks, it jumps to 80% of the time the stock has gone up. Holy moly, does it get any better? And sometimes we'll see it get a little better, and it could get a little worse. And then what we quickly find is, it looks like 12 weeks is a sweet spot. So if I wanted to be bullish on Netflix, it seems my best chance of making money historically is going to be over the next 12 weeks, and it goes up 80% of the time. 8 out of 10 years, it goes higher on average. We're talking 29%. Absolutely monstrous. Now, going back to something I touched on earlier, how does this happen? Big money. I cannot use all the money I have, maybe even if we pooled all our money today, unless there's some really big traders in here, and there might be. Maybe there's a bunch of you guys. But historically, retail traders can't move the market. I don't even know if we pooled the money that we could even make it at the bottom of the CNBC ticker. Could we be one lot and then we're gone? So for this type of thing to even happen, this massive movement, the big money has to commit and commit year after year after year. And then if you think about earnings reports, the earnings reports might even be the drivers that are causing these massive spikes, which I happen to know on Netflix. That's it right there. I didn't ask this yet, but I'll ask it right now. Are there any engineers here today? It's okay. You can admit it. It's not a bad thing. Are there any scientists? Are there any folks that pretty much just like black and white data? They're not into, hey, I wonder what Ron thinks, or I wonder what my buddy thinks. Well, this is the part you're going to love. One more time. This is just the stock's own historical track record. It has nothing to do with what I think. There's no special algorithm. You could even do seasonality on your own time. The challenge for you is, are you really going to do this 24 hours a day for 2 straight days? And how many stocks can you get through? Whereas Financhill can run through the entire market and boom, spit it out within 2 clicks, 5 seconds, and you got all the data you need. That's the exciting part. So engineers out there, this has no special sauce. It's just the data. And we're really, really proud of it that we can, within clicks, just show you the hottest stocks. Now, there is a stock out there that I want to show you. Actually, you know what? Before I do that, let's just look at Netflix. I'm just going to use Thinkorswim here. Bring up a chart. Whatever broker you want to use is totally up to you. I like Thinkorswim. I like TradeStation. Tastyworks is out there. I like that as well. But it's not like it's broker specific. So here's Netflix. It's in a long uptrending channel. There's two lines on my chart. I know there's a couple on here, but there's just two lines I want you to pay attention to. The orange line is a 5-0, a 50-day SMA, 5-0. That is an institutional moving average. When stocks are above it, they're considered to be bullish by institutional standards. When they're below it, they're considered to be not bullish, or you could argue bearish. So above the orange is considered bullish, meaning big money's coming in supporting the price, because that's why stocks go up and down. Money's moving them. Once we're above the orange line, the red line is then the trailing stop. That's a 20-day EMA, exponential moving average, whereas this one's a simple moving average. So what I've been saying to our members at Financhill is wait for Netflix to get above the institutional line because it's entering its seasonal window. And when that happens, on a spike in volume, you know the big fish, the big piggies, they're coming to feed. The elephant is walking out in the pasture to feed. It's leaving a footprint. These are the elephant footprints inside the seasonal window. Pop goes the weasel, and now we actually have continuation. That's how easy it was. Why didn't it go higher before when there were pops of volume? We weren't in the seasonal window. Sometimes we can make the market way more complicated than what it is. The only way seasonality can work is if the big money is committing. If you think back 15 years on Netflix, and if you thought the market is completely random, there wouldn't be this kind of huge line. We were looking at what, 15 weeks? Oh no, it was 12 weeks. You wouldn't get these massive spikes. For these massive spikes to occur and continued runs, the data must continually line up and say, it's going higher, it's going higher, it's going higher. That's how you get these type of massive movements. This is not rocket science. And once again, if you came in late, this is not proprietary. All this is raw data crunching. That's what makes it so exciting. Where if I literally got abducted and taken back to my home planet, as my wife says, back to my people, the data is the data. It's irrelevant to me and what I think. So to me, it's so unfiltered. It's so raw. It's exciting. I don't need to rely on anyone else at that point. Now, for those of you guys that think that seasonality still could be somewhat random, I want to show you a stock that's probably going to knock your socks off a little bit. It's a bit magical, pun intended. What I want to show you is, I'm going to go 2 years. And in fact, I'm going to, because this is GoToWebinar, I can do something pretty neat. I'm going to pause my screen so there are no peeking ducks. Give me 1 second. This is going to be fun. Play. Okay, now you guys can see my screen again. Hey, Dennis or Gerald, can you guys give me a yes real quick? Or somebody else? I just happen to know Dennis and Gerald, but maybe Al or William, make sure my screen is back on. This is going to be really exciting. I would like, hey, thanks, Dennis. Thanks, Robert. I want to ask you a question. When do you think the best and worst time to own Walt Disney is? And I know you see it on my screen right now, but if you think about it, what are some thoughts that go into your mind? That maybe the summer might be a great time to own Disney because the kids are out of school, driving their parents more wacky than they already are. Everybody's at Disney. Or maybe it's the winter, just because you think it's the opposite of the summer. Okay, I'm going to show you something on Disney, and you want to write this stock down because every single October you want to keep this stock in your back pocket. This was Disney in 2016, not this year, last year. All it did was go down. Those are earnings reports, down. Earnings reports in May, down. And last year, Financhill, we've only been around a year. We're literally celebrating our 1-year anniversary. And I said to the folks last year, listen, what I'm going to show you is going to be crazy. And how we're going to know if the seasonality is going to play out is if the volume returns and they push Disney higher. Because back in 2016, what they were saying about Disney was, oh, ESPN and all the layoffs, blah, 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 blah. I'm like, whatever. I found that one of the most valuable tools that I have in my toolbox are my fingers. I take one, stick it in my left ear, and one in the right ear, and then I start humming my favorite Beyonce song, or whatever you want. Because the talking heads on TV, most of the time, they're completely worthless to me as a trader. Everything is after the fact, it's over, and it's, I don't know, maybe they're talking their own book. I have no idea, but it's pretty much useless information. So I said to our traders, listen, watch for the volume spikes. So as we got into October, there's the black bar. Now, black bars represent the stock closing higher. Red bars represent the stock closing lower. I want to make this so simple that a 10-year-old or something can figure it out. When black beats red, it's game on. The big fish are coming back. The big piggies are coming back to eat. There was the first sign. Remember I told you something? Watch that orange line. That's the institutional moving average. That is a sign the tide is turning. Pretty much this whole time we've been below it. But there's one specific time when Disney goes nuts. October, November. Big volume bar, but we're not over the orange line. We get over the orange line. All of a sudden the volume real quietly starts jumping. Not by a whole lot, but black is beating red. It's the eye test. Do not look at this and try to write this down. To me, that's irrelevant. It's just look at the eye test. Blacks are now starting to beat reds. Then there's earnings. Earnings came out on November 10th at 4:15 after the market closed. Look what the funds were doing. And I call them the funds, the big money, the institutions. 2 days in front of the earnings report, there were spikes in volume. Golly gee whiz, Batman, I wonder if they know something. Now, if it's insider trading, you get in trouble for that, right? Unless you're the banks. But anyway, I digress. You get in trouble for that. Are they gambling? Or do they typically know that this is the time that Disney starts running higher? Are you ready? Pop goes the weasel. Look how the volume then surged again, even on the earnings report, and the stock is up almost $3. The days after the event, the volume still goes in. They are buying this thing literally hand over fist. Look at the volume now. We're a month after the report, and they still can't get enough of this stock. They still can't get enough of this stock. They still can't get enough of this stock. Now it's 3 months later. The best time to own Disney is the end of October, beginning of November, right into April and May. Remember I told you something earlier too, the red line. It makes for a wonderful trailing stop. 20 days in the market is actually 4 weeks. And generally speaking, if a stock remains above a 20-something day average, it's perceived as bullish. It's a monthly average in a sense. They're not proprietary to me. I was taught these a long time ago. They're available on any brokerage platform. So once the volume returns, the stock's above the 50-day, it's game on, then the red line is a trailing stop. On April 10th of this year, the stock finally got below the red line. From here to here was a 296% return on a long call. If you were a stock trader, it went from about, let's say, mid-90s all the way up into the low teens. That's pretty amazing. Okay, you ready for the next one? Now this is this year. April was the peak, down she goes. Our members said to us, hey Ron, we're starting to see black bars on Disney beating red bars in July when the kids are, all at Disney, so to speak. And they said to me, does that mean that maybe the stock's going to run now? I said, well, anything's possible. Nothing is ever going to work 100%, but it's not the seasonal window for when Disney does well. It just isn't. So you got to be very, very careful. I can be bullish or bearish on any particular stock whenever I want, but I really want to check the seasonality to see if I'm basically flying into a headwind or running with the wind, right? Am I swimming into the current or with the current? And I said, we're swimming into the current here. There's other stocks that are bullish in July. I just don't want to touch Disney. And my comment was, typically when Disney reports in the spring and the summer, the stock gets shellacked. Look what they did. They ran the stock up only to basically just slaughter the retail traders. And down she goes, and down she goes. So now we're literally 2 months ago. I said, watch the end of October, beginning November for Disney. I said, all we're going to wait for are spikes in black volume. Does this sound like deja vu, right? Spikes in volume, and let's get above the orange line. What do you know? Here comes earnings. They're buying again. They're buying again. They're buying again. Guys, didn't the market have a pretty good year this year? Like the summer wasn't bad, but Disney dropped. In fact, Disney went from about 115 all the way down to 95. It dropped like 20 points, almost 20%, when the market was doing pretty gosh darn good. You wouldn't have been blindsided by this if you had just checked the stock seasonality. There's the earnings report. Look at them buying. And look at Disney now. It's playing out all over again. It's absolutely crazy. Look at the volume spikes. Now, what's really neat about this is the spikes are so pervasive that if I want to be a very active trader, I can even look to buy, sell on the spikes, because those green lines are 2 standard deviation John Bollinger Bands. And 95% of the data is going to be within those bands. So when you're out of it, you can even get really, really creative. Sell the spike, buy the dip. Sell the spike, buy the dip. And I've been doing some of that as well. Do you guys get how seasonality is unbelievable? Watch this. I'm going to type in Disney. I'm going to take this cursor and I'm going to forecast out the entire year. I'm going to make my browser a little bigger. Can you guys tell me when the best time and when the worst time to own Disney might be? Would you say that maybe now in October, November seems to be a good time, and then it carries over to here? It's like, holy moly, October, November, right into May, right in Memorial Day is often the best time, and then you stand aside in the summer. So if I'm a shareholder of Disney, there's a couple things I can do with this information. I am no longer going to be surprised when the stock actually dips over the summer. I could do covered calls on my stock if I wanted to. And then when it goes in an upward direction, I can just trade my stock uncovered. I just hold them, or I could buy long calls or bull calls. I could do credit spreads. I could do bull puts here, bear calls here. So when's the last time you looked at a chart and it was bullish and you said, man, I don't understand why my stock all of a sudden started moving lower. There were no downgrades. I can't find any news that's negative, but there goes my stock. Did you check the seasonality at Financial? All of a sudden, why stocks seemingly just stopped going higher? You just might have gotten your answer. The big money is flowing out, then it flows in. Maybe you've never heard of seasonality. It's also called sector rotation. It's just the smart money, if you will call it that with a laugh, is just going from one place to another, to another, to another. So is the market random? To a degree. Are stocks always random? I have this funny feeling that maybe they're not as random as we thought. There's actually ebbs and flows. So for me, when I see something like this, I'm actually thinking about long calls in here, and then just getting rid of the stock and not trading it, finding something else to trade in the summer. Because watch what happens if I just type in the spiders. This is the entire S&P 500. Remember how they say in the summer, sell in May and go away? That's true if you're looking for just bullish trade ideas. But they also make the summer sound like that's when the market crashes and, there's just blood in the streets. Really? When I take that cursor out over the S&P, there's not blood in the streets over the summer. It goes nowhere. So the idea of sell in May and go away really comes from the market does underperform, but it doesn't crash 80% of the time, as what the headlines try to make you think. It's just baloney. The market does well from October, and then it peaks out right as the kids get out of school. So there's your underperformance. Here's your outperformance. Now, if I look out, let's say 12 weeks in the S&P, what does the S&P do over 12 weeks? Over the next 12 weeks, the S&P 500 on average rises 1.8%. 1.8%. If I'm trading the spiders historically, that's what I can expect the S&P to do over the next 3 months, and it goes up 70% of the time. Or I can go screen seasonality. I can move this to 12 weeks and say, you know, maybe I want to trade these stocks instead, because I think all of these go up by more than a paltry 1.8%. So you do want to keep trading with the market at 1.8%, or try to target some of these turkeys and go for something that's 10 or 20 times that historically. Yeah, this is where I'd want to start. This is what's most attractive to me. These guys right here. Okay, what I want to do now is actually take a look at a couple trade ideas right now. So I told you I wrote down Netflix, Disney, Papa John's, Adobe, AMAT, and NVIDIA. Let me just type in a couple stock symbols here. Oh, just really quickly, just to drive home the point of how powerful seasonality is, I just want to show you something last year, because we'll actually use Adobe together today. Remember the election? Who can forget? That was one of the wackiest things of all time. Here was the election. The new president got in. The whole market was ripping higher. The market ripped higher into year end a year ago. What did Adobe do? It gapped up, and then it went down on big volume, and then down again on big volume. Then it even had an earnings report a year ago in December. It gapped up and then went down. Now, I'm a huge candlestick fan. That's bearish engulfing on big volume. That's a really, really bad sign. So how many times has the market surged or your sector surged higher and you happen to pick the one stock that didn't go up? Does that ever happen to you and you think, man, am I the worst trader in the world? Do I have the worst luck in the world? Here's what the spiders did into year end. Bonkers higher. Here's what Adobe did. You actually lost money from the entry. The seasonality wasn't there. The seasonality on Adobe takes off in January. If you had gone to Financial and looked at the seasonality, you would have known not to pick Adobe in November or October. You would have been writing other stocks higher. You would have said, I'll go get Adobe in January. So Adobe had nothing to do with the election. It actually lost value. And look what happened. There goes the volume. There goes the volume. And what did Adobe do? This was also a 200+% return. It was absolutely extraordinary. So Adobe had nothing to do with the election, nothing to do with the strongest time of the year, which was December. November, October, they went down. Knowing this will stop, I think it will help avoid so many bad or unfortunate decisions. It's ridiculous. So guess what's happening this year? Remember January? Please tell me this is not happening again. Oh, yes, it is. And that's good for us. Is it really that easy? The data suggests it is. There goes Adobe. What did Adobe do this year? Instead of losing value, it was basically net break even or up a buck or two. But we've been trading Disney, for example, and doing really, really well. Over triple-digit returns on Disney already. We weren't trading Adobe. It wasn't time. It was no shock. Look, the fundamental event was here, and again, it produced nothing. And then you think to yourself, wait a minute. I thought earnings reports are supposed to be the fundamental drivers behind a stock's future performance. Yeah, that's what I was always taught to. And I do believe in fundamental reports, and I do believe they can drive a stock higher. But we need the fun for the highest probability chance of being right. We need the seasonality aligned with that good report. Sure, good reports can drive stocks when they're not seasonally bullish higher. Of course that can happen. But what's the irony here? No matter what Disney says in the summer, the stock goes down. Even on Disney, if you were reading different headlines, they were all saying that be careful of Disney's report, literally all of them, because ESPN was not good, as if they were never going to produce another Star Wars movie. Like the people that write these articles, I really don't know what they were thinking. I'm just like, really? It's sort of like the next time they have a thought, just save us and don't say it. It's just hilarious. And then magically Disney goes higher. Here, Adobe, nothing in the strongest time of the year. We did have a gap up in October, but then it went nowhere. It was dead weight. Now it's starting to surge. So if I wanted to trade Adobe now, what are some of the things I could consider doing? We're going to go search, going to go seasonality, I'm going to type in Adobe. Let's take a look. 11 weeks. Let's move it left or right. Okay, 14, 15, 16. It looks like 17 weeks. You might say, well, that's a crazy amount of time. I'll get to that in a second. Over the next 17 weeks, Adobe historically rises 33.6% in 25 of the 31 years. Do you know how many presidents have gone between now and then, come and gone? Debt ceiling debacles, wars, all kinds of crazy things. Markets ups, markets downs. Yet 25 of 31, it goes up. And it just doesn't go up by 2%. 33%. So here's what I can do. If I use Thinkorswim and I go to Adobe, and we looked out 17 weeks, which is basically 4 months. Here's what I like to teach at Financhill. Whatever time frame you're looking at, and let's just say it was 17 weeks, add a month to it just to avoid some time decay issues. So that's basically, if you use a calculator, you say, all right, there's 30 days in a month, so there's 17 weeks. That's basically, 17 times 7. That's 119 days. We can do it that way. So about 119 days, let's add 30. That's it. Whatever time frame you look at, add 30 days. So about 150 days. So that means April or July. When in doubt, I go out. So I'll just pick July. And an at the money option, in this example, the stock's at 183. If I did a strike 180, it costs $17. That's $1,700 a contract. Now, hypothetically, if I was looking at Disney and I was going to go to July, it's only $5 a contract. You can see the differences. So the more expensive the stock, the more volatile the stock is, it might cost more, but they're not all going to be that expensive. Now here's my exit system. I am going to do a little chart with you guys. I'm going to pull this onto my screen. Oh, by the way, here's gold. I got to watch my time. I'm down to 6 minutes. FYI, gold is a rock star historically. Mid to late December, beginning of January. Look what gold does. Boom, 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 and now boom. Guys, this is 5 straight years. What's gold done over this time frame? Gone down to basically nowhere. Yet there is a 6-week window, ballpark, sometimes 8 or 10 weeks, where gold goes up. It's in the window. All the members of Financhill know this. But I just want to share an exit system with you just really quick so you can take this home. For example, if I buy 3 long calls, I can trade this way. The first long call, sell for a 20% profit. Why would I do that? Because 20% is really good. It just really is if you trade options. Second long call, sell for 100% profit. The third long call, this one is really scientific. You definitely want to write this one down. We are going to oink. We all know that we want to try to make as much money as we can, but we have these 2 little gremlins sitting on our shoulder. One says buy, one says sell. And you know the moment you sell, that stock is going up another 1,000%. It's just the way it works. So we're going to follow the 20-day EMA. As long as the stock remains above it, trade is open. When it gets below it, the entire trade or whatever is left is closed. This is not rocket science. It's that easy. And teaching this to the people at Financhill for trading options, they find it super attractive. It's super easy to follow. It controls fear, it controls greed, because if you think about this, if we buy 3 long calls and the first one is sold at a 20% profit, we're reducing the trade's overall risk profile. We're putting money in our pocket. If we can get a double on the second long call, now the third one is completely free. We have no true capital at risk in the trade from where we started. It's absolutely priceless. And that's how we can catch these runners on Adobe. And at the end of summer, I was doing a couple events and I kept saying to everybody, please, 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 please watch Disney. Watch Disney again this year. And look what happened. There she goes. It's like clockwork. So what's going to happen right now is Tanya has been so gracious enough. She's going to type in a link and give it to all you guys. I'm going to try to do it myself. I just don't know if I can. Let me see here. It's going to offer you guys a free trial. There it is. So here's the deal. You don't have to buy anything. But what I would love to have you do is take that 14-day free trial. There's no credit card. Your membership, it's like a Mission Impossible commercial. It literally self-destructs and it goes away. There's nothing to cancel. Please get in there, play around with the seasonality. I'm going to have a webinar on Friday, which you'll get invited to Friday morning. It's going to be 11 a.m. Eastern. You're going to be with all the members. I'm going to do a demo of Financhill. So this particular multi-speaker event is perfect timing. So today's Wednesday, Friday at 11 a.m. Eastern, we're going to have an event together. And then I'll go through and I'll show you the stock score. I'll show you our valuation. I'll show you the fundamentals. I'll show you the newsletters. I'll show you how to screen for bearish stocks. You know, I'll show you all this cool stuff. But without trading, with knowing if your stocks are bullish or bearish on any given time period, really is, I think, the missing link. It's like, why were you bearish on Disney in the winter? It has an amazing track record. You know, which pizza company to buy at the Super Bowl? Domino's Pizza blows the doors off Papa John's. Domino's Pizza actually has historically 100% track record, which very few stocks do. Right after the Super Bowl, there's a window of time where it literally never has a losing year. So you might love Papa John's Pizza. I like money more, so I can go be bullish on Domino's instead of watching Papa John's drop, and then go buy Papa John's Pizza with my Domino's profit. So my time is up. So again, there is that link. It's unique because if you click that link that Tanya's giving you, I can track you and make sure you get that invite for Friday morning at 11 a.m. Eastern. So Tanya, thanks for having me today. Your folks are awesome. You're awesome. I really appreciate it. I hope all you guys enjoyed it. Again, it's a free trial. You have nothing to lose, nothing to risk. I also saw the presentation list that Tanya put together. I've taught with Serge and Vince and some of these other guys before. So you guys are going to have an awesome day of education. They're going to show you some of their favorite ways that they like to trade. So you're going to be able to learn a ton. If you have any questions, the email address is care@financhill.com. Okay? You can always send me an email there. But otherwise, just let Tanya know and she'll be happy to help you. So Tanya, thanks again. And thanks for having me as part of this great event. So have a great day, everybody. Happy New Year. Bye-bye.